equity investing has evolved more of a long-term wealth creation tool.
We'll see a lot of giants and global brands coming out of India in the coming years.
And in the next 6 years, we should be at least a 30 trillion market.
In about 6 months, there were 20 million new trading accounts, demat accounts, which got opened.
Hey everyone, this is Ankur Warikoo and welcome to Dhan Ki Baat, an initiative by Times of India and StockGro. We have the next panel up ahead. We have Kshitiz, Amrita, Harshak and Ajay. Thank you for joining us. This is going to be a very interesting one. So I'll start with you, Kshitiz. You run a PMS and you're essentially catering to individuals who have a corpus built up, would want to do a lot more with their wealth. How have you seen that landscape evolve since the time you've been in the space? What are the key differences and big changes that you've witnessed?
Well, hi everyone. So, it's a remarkable journey, Ankur, for sure. You see the way this entire landscape has evolved over a period of time. So when I started my career, Sensex was around 2,500.
2,500?
2,500. It's laid back in 2000 I'm talking about.
Wow.
So, and every 10 years, Nifty has become Sensex. You see, 2014, when Mr. Modi came to power, at that time Nifty clocked almost 25,000. Sensex clocked about 25,000. Today Nifty is around 23,000 levels. So I think what we have seen from just a trading platform, equity investing has evolved more of a long-term wealth creation tool.
Yeah.
And I think thanks to platforms like TOI, thanks to various business channels, thanks to a regulator, AMF initiatives, that we are able to see that mindset change is coming. Yeah. A lot of trust has been built through ads like mutual fund sahi hai, wherein people are talking about that, boss, what you are doing right now, which is an unorganized way of investing, like what used to happen before GST, the same thing is now happening in investing also. Unorganized to organized, rather than getting into a Ponzi scheme or let's say some committees. One is coming, people are coming toward organized investing, which is mutual fund. And we've been wary of the fact that still it's a long journey ahead of us. But yes, the directionally we are moving in a right direction.
Fantastic.
And look forward to that. A long way for India.
No, absolutely. Long on India. On India.
Yeah.
Amrita, you're the helm of bringing in retail participation, not just for the Indian market, but also for the US market and in various asset classes. How have you seen this shift at INDmoney, where you started and very young investors come in, families come in, of course, seasoned investors coming in and making commitments on your investments? What's the journey been like? What's the big lessons you can take away?
So the big lesson, definitely the demographics have changed, right? So a 20-year-old today is already investing in markets, is very excited, and why not? If you see the entire participation, why will anybody not want to participate in this market? Given that we are growing way faster, and in the next 6 years we should be at least a 30 trillion market, which at least the top third market in the world. And the same is actually very reflective of the investments pouring into the markets as well. So if you see, FIIs have not been pouring that much money, but DIIs have poured like 80,000 crores in March itself. So the entire faith of Indian markets is now lying with retail and domestic investors who are pulling the markets, and because the belief they are willing to pay at a higher valuation or premium because of the faith that this is going to multiply.
This is fascinating. And absolutely, I think all of us are in many ways just eternally optimistic and also practically so, because it's just so much that's happened in the last several decades out there. Harshak, you've been creating content on finance and you have this ringside view of what's happening in the industry. How have you seen businesses evolve? Why do you feel that there is such a euphoria in the stock market, in investing in the stock market, whether it is trading, whether it is long-term investing in mutual funds or any such combination thereof?
See, what I've seen is that I strongly feel that education about all these things have played a major role in making these things happen. If I look at it in a perspective, there was a time 10-15 years back, I guess, not exactly 10, let's say 10 years back, when everybody wanted to be a cricketer. looking at MS Dhoni, looking at new players coming, and everyone wanted to be a cricketer. Now here's the time where everyone wants to become an entrepreneur. Everyone wants to become an entrepreneur. Everyone wants to become a businessman. Want to have something of their own, irrespective of their age and whatsoever field they are. No matter in whatsoever background they are having, in whatsoever field they are in, they just want to build something of their own. So education has played a major role in this, and what has happened is that what will happen in the coming years is that we'll see a lot of giants and global brands coming out of India in the coming years. And our population is also very young. 65% of our 144 crore population is under the age of 35. And if you look at the overall scenario right now in the market, we are at what about 3.5 or 3.7 trillion dollars right now. And as per the finance ministry and all the predictions which are made, in the coming probably 3 to 6 years, we'll touch 5 to 7 trillion dollars, and we'll be ranked third in the global economy. So I see more people, more money in people's pocket. I see more businesses coming in, and that means people will be having more capacity to spend and consume. And market has a lot to give. And once the market has a lot to give, at the very same time, we have consumers as well to cater. So if the businesses, they position themselves well to their total addressable market, I feel it will be a golden period for all of us.
Good man. I share your optimism. I think most of us on this panel also do. Ajay, you took a very interesting view of how the markets were changing in the form of StockGro. And you were like, you know what, this can be a really interesting way for people to understand how markets work and while have fun with it, and of course build communities around that. So I'd like to believe you saw a very different side of this market euphoria. It was not like real money in that sense. What are the things that you observed that fascinated you, or something that you figured was, oh my God, I did not expect this at all?
Ankur, one, I had a very, very unique perspective of the market, especially because we started in 2020, right in middle of COVID.
Yeah.
One, I think during this period of COVID, people realized their true living cost. Everyone was locked down, everyone was at home. They knew my living cost is say 50,000, 1 lakh rupee, 20,000 bucks. Beyond this, all the money I have is excess capital which I'm not spending, and I should start investing. And second realization everyone had was market had suddenly come down from 12,000 to 7,000. And that awareness was there that it's going to grow from here. In about 6 months, there were 20 million new trading accounts, demat accounts, which got open. And this was that excitement saying, one, we want a parallel source of income. I have the time and I have this excess money which I'm not using. And what is a better way of doing this except stock market? We, I think, fortunately were at the right time, right place, teaching people how to trade and invest.
That is being modest, but I'll take your word for that. I have, because all of you represent very different sides of the same animal, if you will. How have you seen the demographics change? And with that, the risk appetite? Like, do you think that the markets are riskier than they were, and people who are coming in are also more impatient, greedier, or do you still feel that there is that same mix where people are always going to be like that? There'll be some which are very sane, some which are very risk-loving or risk-taking. How has that changed, if at all it has, Kshitiz?
So Ankur, for Gen Z, or let's say for later part of millennials, life is much easier vis-a-vis ours. They have their basic things plugged, fixed, taken care by parents. So their risk appetite is obviously little more than what you and I would have taken in our times. Yeah. Second, last 4 years from the lows of 7,400, we are around 23,000. So, people have just seen the bull run side of the market. Markets are always not going to remain like this. So many of the guys who have started investing, they're just seen that yes, money making is easy. I'm not scaring people who are listening to us. I'm just telling them that it's not that easy. Yeah. You have to give time. So yes, risk appetite is there because their basic things have been taken care. Second, markets have been really good. That's why they have seen. Third, this is a golden era, Amrit Kal for India. And that is what helping markets also to do well. I'm sure it will keep on doing well from here onwards also. But yes, that mindset change of getting into an organized way of investing is there. So one is people who are into trading stocks. I can understand there are 9 crore now unique demat accounts which were 4.5 crore before COVID. But there are 4.5 crore mutual fund account which were around 2.5 crore before COVID. And last month, SIP number is 19,300 crore. So there's a monthly SIP which is going, which is actually helping market to stabilize. So just take 20 seconds more. I'll take on this that once you have a selling coming from FIs, you have a domestic participation of almost 2.5 billion from SIP, 1.5 billion from EPFO insurance, and from a category called Balanced Advantage Fund. So the month where you have selling which is more than 4 billion, you see markets going negative.
Yeah.
When you have a domestic participation which is holding up the market or supporting the market, then you see, yes, you are working on the depth side of the market.
Correct.
So yes, demographics are changing and people are realizing that, small, but they should put money in market.
Yeah.
But there is other side also where people are chasing returns, where
Unrealistic returns.
Where I will say, if an organization is growing at an earning growth of 15-16%, you should be looking at around 14-15% as the real right percentage which you should looking at or targeting.
Absolutely.
Yeah.
And not 25%, which everyone's now used to. Right?
Yeah.
Warren Buffett सिर्फ 19 से खुश क्यों था? Like, it's just fascinating how the world changes. Amrita?
Yeah, I think like demographics have definitely changed also because, markets have given unrealistic returns last 2 years. But you have to, what I feel is that Indian markets, since the time I have been investing, has never been cheap. At whatever levels, they always seem expensive. What is exciting is the opportunities, right? So if you see, if we have less than 1% paying direct taxes in our country, and if we have, obviously now there's more money because the whole urban-rural disparity hopefully eventually will pan out better. And so if you see, the whole opportunity is more exciting today to participate in the growth story, because the pyramid will eventually look like maybe a diamond, and then you want to participate in that growth. You want to be a part of that growth and not be left behind. So I think that is what is exciting, and it's very easy to get information today. The digitization, a lot of apps like INDmoney and so many others, it's very easy for me to understand whether I want to participate in this company's growth story or no, which was not so simple. So I think all these things combined today are giving more opportunities in this space.
Absolutely. This democratization of information and content. Like, there was a time when I remember people used to make money in the stock market because there was information asymmetry. मुझे कुछ पता है, कोई tip है, यहाँ कुछ release होने वाला है, उनको highway order मिलने वाला है, something. But today it's genuine just democratization.
Yeah, and if I just do the numbers, we took from 1 trillion to 2 trillion, we took 10 years. From 2 to 3, we took 4. And to add another trillion, we took 3. So which means, I'm adding, and I want to participate in this growth.
Absolutely.
So that is very exciting, and that's something that today's generation and the younger, and everybody wants to make that wealth, which can only be created through equity participation.
True. Absolutely. Harshak?
So what I feel is that everyone has said most of the points which are actually very valid and making a lot of sense and logic. One thing what I would like to add is that what has happened is that most of our population right now are young. All these young population are available and using internet on a daily basis on all the various social media platforms. And in the last 7 to 8 years, there has been a flood where finance creators have come all over the social media, teaching people personal finance, stock market, and different things. So what I feel is that how the demographics have changed is that first people used to think that this is just a game of very learned investors and everything. It still is. But what has happened is because of the exposure of information in today's date, people tend to invest more and get themselves involved in the game because social media has exposed the lifestyles of investors. You see a lot of investors, influencers having a lavish lifestyle because they invest, everyone telling that I invest in this, I invest in that. So that makes people think, okay, that makes stock market and investing very aspirational for people to invest in.
These days, paise double.
Yeah, that's what. And but the thing is, then again, the problem here is that if you, what Sir also told, Kshitiz Sir told that if you run behind quick cash, let's say if you are running behind quick cash, sometimes you will make huge profits and sometimes you will make huge losses. So at the end of the day, it's going to average out. So rather than running behind quick cash and just investing because someone told or just because a piece of information, what I feel is that you should do your own research because it doesn't make any sense if you're not aware about your own investments. It will leave you uneducated about your own money itself.
Absolutely.
That where I have invested just listening to information all over.
Exactly.
So yeah, that's the thing which I'm looking up to right now in
That
the
makes
industry.
so much sense. Absolutely. Thank you for sharing that. Sage advice. Yeah, Ajay.
See, what has happened is I wouldn't disagree saying the risk appetite has changed, especially with the millennials who are coming on board. But this is the Instagram, the Facebook generation, right? And
फेसबुक तो नहीं है, तुम बूढ़े जैसी बातें कर रहे हो. कौन है फेसबुक पे अभी?
Instagram and Twitter generation, but they love instant gratification. Right? And perhaps that's the reason you are seeing so many people getting into FNO. Right? The moment you put in a trade, there's a change, and it's not about the risk that they're taking. It's not that they're putting in lakhs of rupees out there, but they want to have that adrenaline rush. They want that dopamine. They want to see that instant change. And सुबह 10,000 रुपए डाले, शाम को 11,000 रुपए हो गए. It's huge for me. I'll go back with this money. That is what is exciting for them in the market right now.
And I think that's happening. And to the point that Kshitiz mentioned, that if you're 24, you have never seen what a bear market is. Like, you have no idea. You started earning at around 2021, तब से market चली जा रही है, आपको लगता है भगवान है. And then the next thing you know is when you do have that correction, that's when reality hits. And I think that cleansing is always important. And for those who have been in the environment, I think Harshak is the only one who perhaps hasn't. We've seen enough to know that the cleansing happens, and whether it's the startup world, whether it's the investing world, there's always this nice, happy balancing act that comes through. Okay, before we close, because this is the question I certainly need our predictions on, and this was the first time you heard it from all of these experts. We just hit 75K on Sensex. I need a prediction on 150,000. When will we hit 150,000, which is twice or double of where we are? Your guess on the year.
First of all, congratulations to everyone. My sense is we are capable of growing at 15% compounding from here onwards on the market side also. That means in 5 years' time, easily we can do that. And if you see, I'll just add to this, that if you see that if GDP can compound at, nominal GDP is a combination of a real GDP and inflation at 12-13%. When GDP increases, consumption of your discretionary spend increases double or triple, because your basic needs have been taken care. It doesn't grow that way. So the money in circulation comes very fast. So wherever the countries like Japan, China, USA, GDP has gone from 3 to 6 trillion, their markets have gone 3 to 4 times. So I'm not giving any numbers, but what you're talking about seems like by 2029, 2030, that's my guess, is we should be around that number.
So Kshitiz, 29, 30, lock kiya jaye. Amrita?
So I'll behave like a millennial and say at a 13% CAGR, I would say 2030 is when we should double. And to Kshitij's point, and the whole India story is that GDP growth, doesn't always translate to capital markets being rewarded with that, but that is unique about our market. Unlike a China where GDP growth is happening but the markets are not moving, these GDP growth are actually converting to corporate earnings because of the whole government and the policy makers and all those supports. That's why I'm very excited about Indian markets, and I think at a 13% CAGR, 2030.
Perfect. 2030 is Amrita. Harshak?
I also feel the same, that in the coming...
मुझे लगा आप 2024-25 बोलोगे.
No, I feel that in the coming like 6 to 7 years, probably, let's say 2030 or 2031, but we will reach there is one fact, and how we'll reach there is the second question. Is that what I feel that right now with the speed of the market, financial education is also growing at the very same speed. So if people take the financial education in the right way and they make more learned decisions, not run behind quick cash, then definitely we'll be like, the economy will be growing, and yeah, that's the thing. 2030, I'll agree with you guys.
Perfect. Great.
I think there's a different way to look at this. Markets move from, say Nifty moved from 12,000 to 23,000 in just about 3 years. Now, if you have to go from 23,000 to say 45,000, the amount of capital that is required is almost 3 times than the capital that was required from 12 to 23. Interestingly, there's a different perspective to this. That is, today less than 5% of our total population participates in stock market. But if there's a larger population which starts investing, that is, if 10% of our total population starts investing in markets, the capital flow or the momentum of money that will start coming in would be much faster. if not 2030, maybe 25, 5, 6 years is a very good time if there's more market participation that can get created.
But we'll be adding 1 lakh demat accounts on a daily basis.
Yeah, exactly. A lakh DEMA accounts and on a daily basis. So your year, 5 years, so 2029.
Yeah,
You're good?
assuming that more people start participating.
As the financial education is growing, I feel more people will participate, but definitely if they do in the right way, then we'll be
Consensus clearly 2029. Here you heard it first. The panel has said it, and we'll see what happens in 2029. If it pans out, great. I'm glad you listened. If it doesn't, you will only have yourself to blame. You shouldn't have. But no, I'm being flippant. Thank you so much for joining in. This is Dhan Ki Baat, an initiative by Times of India and StockGro. This is your host, Ankur Warikoo. And thank you all for wonderful conversations. Had a lovely time. Thank you so much.